The U.S. market closed today for the Thanksgiving holiday. This gives Canadians time to pause and reflect on the performance of the S&P 500 and compare it to that of the TSX, and perhaps consider some Canadian stocks. We're joined by Ross Healy, Chairman of Strategic Analysis Corporation. Ross, thanks very much indeed. What's top of mind for you today with the U.S. market closed?
Well, Andy, I'll tell you the truth. I think I'm going to turn on my... There we are. That's a bit better.
That's good. We can see you now. Okay.
I suddenly realized that I was in the dark there. I suddenly, at least I realized in looking at the U.S. market. Oh, sorry. Okay. We're out of fire department things. Oh, come on. Sorry, Andy.
Do we have to break away, Ross? Is something happening? Should we come back to you?
Yeah, we've got a fire alarm.
Okay.
Test.
Okay. Well, we'll come back to you when possible, Ross. Thanks very much. Let's switch over now to have a look at the commodities. Copper of interest here. Let's put up a one-year chart for copper because the anticipated giant demand sparking M&A in that sector. You can see copper up 25% in the past year. Maybe we could put up a 5-year chart for XBM. I often cite this as it's an ETF in Toronto. Often cite this one as a proxy for sentiment in the base metal stocks. And look at that, they are moving up. Classic cyclical stocks, but of course copper is a special case right now because of the anticipated massive electricity build out. Let's have a look at CEG now, which is Constellation Energy, a major electricity producer south of the border. We have seen stocks such as Nvidia and Oracle come off the boil as people reflect on the massive cost of the AI build out. We'll have a look at CEG in a second. I think we've got Ross Healy back. Ross, thanks very much indeed. We're going to put up a 10-year chart for the TSX Composite now. It hasn't been a bad run lately for our benchmark.
Well, when you compare the valuation of the TSX to both the Nasdaq and the Standard & Poor's, our index is way cheaper than theirs. Our in price to book terms, we're about half, actually a little bit less than half of the American market, and it looks very much to me as if there is going to be a swing towards Canadian assets, therefore, which are quite cheap, and which you mentioned oil earlier, but oil are banks and golds, and so on. When I look at the U.S. market, what I see is extreme uncertainty. The Standard & Poor's and the Nasdaq have reached back recently at their peaks to their peaks in the year 2000. And
in terms of valuation, Ross?
In terms of the valuation, yes, in terms of their price to book of their valuation, and at that time, the S&P just held up there, and actually it looks as if it was kind of breaking out. The Nasdaq looks as if it tried to break out and is breaking back. I think under the pressure of the downwards move in the AI stocks. So the market, the U.S. market, is at kind of 6s and 7s, whereas our market, I think, is quite clear. It's cheap, and the values are good, and the values are rising, by the way, which I'd like to see. So all in all, I think Canada is a safer place to invest.
I'm just looking here. I mean, we do have very different markets. Excuse me. But over the past 5 years now, our market, according to my Bloomberg screen, when you include dividends, now ahead of the U.S. market with a total return for the TSX of 108%. That's 7 points ahead.
That's right. in a very long-term sense, Andy, if you look at the Canadian versus the U.S. market, there will be periods when the U.S. market outperforms and the period when the Canadian market outperforms. And I think we're moving away from the U.S. market outperforming to the Canadian market outperforming now.
You have some stock ideas for us. Fortuna Mining, Ross, FVI, what attracts you there?
It's first of all, it's a very cheap gold stock compared to most of the other gold stocks. Secondly, it does what I like to see. It has excellent reserves, and the high quality reserves are growing. And when you've got a gold mine, you got to remember that every time you take something out of the ground, if you don't replace it, then your total values are declining. Well, that's not happening with Fortuna. They are expanding, and so when I look at a quality balance sheet, cheaper than the average Canadian gold stock, and expanding reserves, and I think, by the way, in a nice politically stable environment in the Côte d'Ivoire. So all of those things add up, I think, to a very promising investment.
Another, and certainly that stock's had a tremendous run. Another name that's attracting you is Power Corporation, the financial conglomerate.
Sure. Andy, I had been steadily kind of recommending Power Corporation for the past 3 years to my clients, and for the first two, they just kind of sat there and didn't do anything. And then this year, all of a sudden, it all sort of came together, and Power Corp has done very, very well. It is still, however, very cheap. I wish, instead of taking 2 years flat and then 1 year straight up, it had just given me 20% a year. I'd have been happier. But that isn't the way that life unfolds some way. And but the stock, when you look at the historical peak on the stock, it still has a nice way to run.
And then finally, Laurentian Bank. It has been a disappointment for investors over the years, but you see upside here.
Well, I do. The Laurentian Bank is very cheap, and this reminds me, of course, a lot of Power Corp. Okay, it's just sitting there and sitting there and sitting there. Why don't you move? Why don't you reflect those values? You ask the market. Well, I am no doubt that the market will reflect the values, but it's going to take time. And when it does, I think we could see a very nice move in this stock.
Right. What attracts it? What could ignite Laurentian Bank, do you think?
Well, I had thought for some while it would make and by the way, if you look at all the fundamentals of Laurentian Bank, it would make a superb acquisition for another Canadian bank. And I thought, with the TD being essentially now shut out of the U.S. market, it would be an ideal acquisition for it. A huge discount from its book value. You put the TD systems in there, and the ROE on Laurentian Bank would just shoot up. It would be an absolute steal. Another possibility, of course, is that an American bank decides that it wants to come into Canada, and this would make a superb platform for that. However, if I go back in history and I look at Laurentian Bank, I see that from time to time it doesn't make any difference whether anybody buys it or not. From time to time, the market just says, "Hey, tremendous dividend, very, very cheap," and up the stock goes. Ross. Now, $42 was the area that people were kind of hoping that the company would be able to sell itself at. Wasn't able to do that, but nonetheless, that is still incredibly cheap. And I suspect that all by itself, the stock is worth a good deal more.
Ross, thank you very much indeed. Ross Healy, Chairman of Strategic Analysis Corporation.